going on, everybody?
Hello, Chi Chi fam.
We are live. Hopefully, we sound good. I think I sound good right now.
Sound fine?
Gosh, it's been a minute. It
Your
has
studio
been a
looks
minute.
different, though.
I know. Gosh, so good to be back. Well, we got a lot of stuff to talk about, mainly refinance, market update. There's been a lot that's been going on. I think it's been what, 3 weeks since we came back, came
Oh, I think
live.
it's a little bit longer than that.
I think it's been about maybe 4 weeks, maybe 4 weeks. Yeah, I think it's about 4 weeks. Here, let me just do something real quick, just to let everybody know that we are live. All right, go from there. Okay, why don't we do some market update real quick, huh, Lisa?
Absolutely.
All right, let me just share my screen. There you go. All right, look at those inventory. It's getting up there, but do you guys see this? So it's at the point right now where it's just kind of stabilizing. It's not going any higher. It's not going any low. It's kind of like stabilizing. Because look, from from what, June, it's kind of like just been here and then it's kind of going. So it hasn't really moved much. Same with new listings. Same with sold. Everything's kind of stable right now. It's not like dramatic drop or dramatic increase, anything like that. So inventory is up from last week by 0.2%. New listings are down 6%. Sold homes are up 14, almost 15%. Pending homes are down 10%. Now from last month, inventory is down this month by 4.6%. New listings are down 5%. Sold homes are down 11%, but pendings are up 3%. From last year, just the same month, of course, we have 23% more inventory this month than last year. I mean, this year than last. New listings, no change. Sold homes this year are down by 5%. Pending homes are up by 2%. And year to date, inventory more by 23%. Inventory is also more, new inventory by 9%. Sold homes are down 1%, and pending homes are down 1%. So that's very interesting, Lisa, because that's not a lot.
No, not at all.
1% is not a lot
Yeah, I mean,
year
that's
to
very
date.
rare. Mm-hmm.
Yeah, so from January of last year to now, like, it's not much. Like, I thought it would be more, but it's actually not. So this is what me and Lisa talks about a lot, right? Because you're looking at weekly and then monthly and then same time last month and year to date. It shows you like a big old data now, and it's not as bad as a lot of people think it is.
Right,
1%. So it's
right,
not much.
right. This is good to see, Chia, because so many people are thinking that the sky is falling, the sky is falling. We say this all the time. And this is the reason why I love seeing this data chart because the numbers are there and you can see it for yourself. Don't listen to your friends, don't listen to your families, don't listen to people on Facebook, don't listen to TikTok, don't listen to Instagram. It's like,
And another thing people don't really consider too is they watch a video like that, right? And then they
yeah,
automatically assume that's their market. It's not
right,
their market. It might be in Arizona, it might be in Nevada, it might be in North
absolutely.
Carolina, Florida, but this is Sacramento, okay? This is Sacramento County, as you guys can see right here, Sacramento County, and this is the data, all right? So it's not that bad, okay? That's kind of reassuring, pretty reassuring, okay? Average price per square foot went up by 1.8% from last week. Same with last month, so it hasn't really changed much. From last year, same month, went up a little bit. But year to date, there's no change. No change. Okay, that's interesting too. Days on the market, how long it takes for a home to be off the market. This week on average is 46 days. Last month was 40 days. Um, Month to month, no change. 40 days on average right now. But see right here, this is a big thing right here. I think people are like automatically assuming the market's falling down, right? Falling from the skies because of this too. How fast homes are moving. Last year, same time, it took 28 days. This year, 40 days, right?
Right. What is your take on it taking a little bit longer? Gia, I have my take too, but I'd like to hear yours first.
Because there's more inventory now. There's
Okay.
more inventory now. So a lot of buyers, what they're doing before they're submitting offers is, I want to go see my options. I want to go see more homes out there, and then I'll come back to that one.
Okay.
And then when they do decide on the home that they're gonna submit an offer, if they ask for like credits or everything from the sellers, if the seller says no, then they go, okay, fine, I'll just keep looking. And
Yeah.
then the home sits, the buyer's still interested in that home, so the buyer goes back to that same seller and say, hey, look, or can you reconsider our offer from initially? And then the seller goes, okay, fine, it's been sitting, I'll accept your original offer. And then that's what triggers the days on the market, really. And that's why I always say it's so important for a seller to price their home correctly when they put it on the market the first week, because price, marketing, all of that matters so much right now. And the way you present your listing to a buyer within the first week to 2 weeks is so crucial. So, you know, if you have an offer that's pretty fair, because right now everybody's asking for credit, okay, right, Lisa, as a buyer.
Mhm.
So if you know that as a homeowner, you need to sell your home, most of the time, your first offer is probably going to be your best offer. Most of the time, especially in this market. Okay.
Yeah.
So that's my theory behind why it's taking so much longer.
Right. And Chia's very right about that. Chia, as a realtor, he's the first line of defense for you guys. Okay. So he'll see all the things that's going on in the first place. For me, as a lender, and because we also own a TC company, I see it when it comes to me. And here's what I'm seeing that's delaying the escrow. Okay. We all know that the insurance companies are, a lot more particular these days, and many insurance companies do not insure in California anymore. So the ones that are left, okay, if your home is older than 30 years, some of them require that your roof be done. If the roof is at the end of life, if the AC, the HVAC, they're going to look at a whole bunch of things. And a lot of
Yep.
times, if the seller does not agree to do this, the buyer walks. The house goes back on the market. So now it's taking you a little bit even longer. So that's what
Yep.
we're seeing. We're seeing a lot of escrows being canceled because of things like this. Okay.
Yep. That is it. And
Mm-hmm.
and another thing too that you made a good point about, the reason for the longer escrow period of it being on the market longer too is because it's coming back on the market.
Correct. Correct.
Cancellations. It happens, okay? More than usual right now, okay?
Yeah.
So it's because of that.
So
But
on
look
top of
here.
presenting the house well, on top of presenting the house well, I had the situation where the seller was like, "Hey, we don't want to move forward with redoing the roof if your buyers do not sign the contingency and whatnot." I was like, "Hey, here's the situation. If the roof is done, but the insurance company is still not okay with it, where
Mhm.
do they stand on this? Okay, it has to be done in workman's manner. You have to show proof that it's done. It cannot be done by a neighbor who says, "Hey, I DIY'd this and saw this on YouTube.
Yeah, they're gonna
I'll
ask
do
for
your
all the
roof
permits,
really."
record, everything.
Correct, correct, correct. And they're thinking, well, what if we do all this and the buyer doesn't want the house anyway? Well,
Exactly.
that's an unfortunate risk, right? At the same time, the buyers do really want this. The house is not theirs yet, so why would they put themselves in that jeopardy? right?
It's not
It's
just
not
that too, though, right? Because even if this buyer decides, you know what, they're gonna cancel because the roof ain't done, the seller still needs to get it done because it's not gonna happen to
absolutely
just that one buyer. It's gonna happen to
right.
all the buyers after that buyer that canceled.
Absolutely, absolutely. I was just gonna say that as well, Chia.
Yep. Sorry, I jumped the gun.
That's okay. We're on the same page. I totally like this.
So we have a comment already from my, but we're gonna talk more about that in a bit after this update, okay, mine? So we will definitely talk about the mortgage rates. Lisa's gonna talk about that. This is interesting too. Year to date for average days on the market this year is 37 days on average. Last year 28, of course. So it is like 9 days faster. But you think about it, 9 days is not a lot. Okay, so that's why I keep telling buyers right now, it feels to you like it's a buyer's market, but technically homes are still, on average getting sold within 37 days on average. And because of that, it's technically still a seller's market. In
Yeah,
some in some areas, it may be different. Like right now, I'm looking at Sac County, and Sac County is huge. If I go to specific zip codes, it may be longer. Okay, so it all varies. Of course, once I start condensing all the data, that's what really happens is the days on the market may shift. Okay, different price points right now. Anything over 550 to 600K, staying on the market way longer than 40 plus days. Way longer. Because the buyers in that pool, there isn't that many buyers in that pool. But anything under that, there's a lot more buyers. It's more affordable for the average buyer, and they're looking more in like the medium household and under, which is like 550 and under. So
absolutely. So it's wouldn't you say, Chia, the harder the price point is to sell, the better it has to be presented, the more prepared it has to be. Because if they're buying in this certain price point, okay, then they're going to expect all these things to have a much longer life, such as roofs, such as HVAC,
they're
such as
nitpicking everything.
right appliances, even okay, a lot of things.
Yeah, they're nitpicking everything when the price point goes up because again, they're spending a lot of money on it. So now they feel like they gotta make their money worth it. So that's what comes with it. But let's move on. I want to see this as well. Active price went up from last week, just a tiny tab. No, not much change. Sold price went up 3% from last week. Okay. Now from last month, sold price went down by zero point 0.2. Active price is down by zero point 0.6. Year to date, okay, year to date. This year, prices are down by a tiny tab. Okay, same month, same different year. Went down a tiny tab. Active price went down by almost 3%. But look at this. Look at this. Okay, year to date on average, last year to this year is actually more by 0.8%. That's really important to see because, like what I was talking about earlier, when you're looking at month to month data and then week to week and then year to date on average, it's not going down according to data. Prices have not gone down. But then again, this is Sacramento County as a whole, right? If we condense the data to specific zip codes, it may have gone down from last year to date. But as a whole, Sacramento County is actually up by 0.8%, you know? So the average right now, is 613,000. Last year was 608,000. Isn't that interesting, Lisa?
Yeah, very much so. Because right now, everybody's already assuming because it's been very, very volatile, right? And the job market's not as stable as they say it is. And everybody is a little bit more conscious when they're buying. Consumers are buying less. It trickles down to everything so far. So you would assume that it actually be the opposite.
And it's not, according to the
Hmm.
data right here. Okay,
Correct.
according to the data right here, it is not.
Not in our area, anyway.
No, not in our area for sure. Sacramento County, it is not. Okay, all right. Now let's go to the month's worth of inventory. and then we can start talking about. Course is up, it's at the
Okay.
2.6. This month, well, this is not that, it hasn't ended yet. So
Yeah.
we're at 2.8 months worth of inventory. Last month was 2.5. Last year, same month, two 2 months, so it's like a 30% increase this year. Year to date, 2.6 compared to 2.1, so 24% change from last year. It's gone up for sure, okay? But it hasn't gone up enough to where prices are gonna start going down a lot, like what you guys just saw earlier, right? It's up this year by zero point 0.8. Inventory's going up though. We've been in the 2 months range, on and off, but then so far, what, April, May, June, July, like it's almost there. It is definitely being more stabilized right now, like steady market right now, to where plenty of buyers, plenty of sellers too. It's stabilized right now. Okay, but it hasn't been too crazy to where it's a buyer's market, as you guys can see here, and from the prices. Okay, so that's that. 2.6 on average this year to date inventory. Okay, all right, let me share market update. Okay, here you go, mine. Here's the rates as of today.
Okay. Keep in mind, this is average rates across all of California right now. It's really possibly nationwide as well. Okay, but
Mm-hmm.
this is the average rate based, and it's this the average rate that doesn't really take into place completely. Okay, credit score, how much equity, how much down payment is being put down too. So you'll see a little range at the bottom where it says 6.13 to 7.2. That's the range where it's going to come in. Okay.
Yep. So there you go. That is the mortgage rate today. So of course, like what Lisa said, everything's gonna change depending on your situation. Okay, everything's gonna change. The moment you are done watching this live stream and you go talk to your lender and try to lock it in, probably
Yeah.
not gonna be like this at all. I guarantee it. Okay. All right, Lisa, you ready to pull up some numbers and go over the refi?
I am. Okay, let me go ahead and share my screen.
Okay.
Okay. Okay, I want to make sure, is this visible to you? Is it big
Yes.
enough? Okay, perfect.
Yes.
Okay, so before I even start this, I want to make sure everybody understands. Last week we had this frenzy where the Fed says they're going to lower rates, okay, and everybody's looking at the pulse and refinancing. First of all, your lender, okay, and you should watch the pulse together to see whether or not it makes sense for you. The reason why I say this is because just because the Feds lower the rates doesn't mean it always trickles to the mortgage rates right away. A lot of times the banks have already cushioned for this. Understand that they may already have this information ahead of time, so they're pretty much doing it prior to that. So a lot of you guys are probably asking, well, my lender said the rates didn't even go down. In fact, it actually went up. That is absolutely true. When the feds cut the rates, a lot of times they'll cut rate. That what that means is they cut rates for cars, student loans, other things as well. And guess what, guys? They also cut for high yield interest rates. So when you hear that, it's a little bit misleading. So I wanted to share with you what the rates actually are. Okay. So let's just say, for instance, somebody buys a house for 500,000 a year ago, and the home value hasn't really increased. So let's just say it increased maybe about $10,000 from last year. They have a 7% interest rate. Okay. This is what the mortgage payment is with the full property tax, insurance, everything.
3,200.
Okay. Almost 3,300 right here. Right,
Almost
Tia?
33. Yeah. Uh-huh.
Yeah. So if your house is valued at 510, and keep in mind, as I mentioned earlier, your rate's going to depend on your credit, how much equity have you built, and how much you've already put in when you purchased the house. So assuming this person put in 20%, okay, and right now we have our rate, assuming your interest, your credit score is above 740. Right now we have it at 6.25. Okay, your property tax, your home insurance is going to be the same. Your monthly payment is currently 2472. Okay, and if you look at the bottom here, your full PITI is going to be 3110. Scroll
Mm.
down a little bit more, guys. This is how much you're going to be saving, $188. Now, keep in mind, this is with you putting an additional almost $4,000. So let's say we keep just that 20% in here. Okay, let's see if that'll do it. Okay, a little bit too much. Let's try that. Okay, good. Okay, it's roughly around there. So you're going to be saving roughly about $164. Okay, guys. So in $164, okay, you're going to be saving almost $2,000 a month. You're going to be saving about almost $60,000 in the life of the loan. Okay, and then this is the amount. This is where it gets really, really tricky. And I'm going to go into this portion more so in a little bit. You've already paid almost 32,000 because again, you've already paid this amount for 12 months already. You got to deduct that and add to the cost of the refinance. Now, I understand that the cost of the refinance, why does it look lower than what the actual closing cost is? Because you got to take out the property tax portion. And the reason why you want to take the property tax and the home insurance is whoever your servicing lender is right now, they've already collected up to this point for you, which means they're going to reimburse you a portion of that. So the real refi cost, we have to take that out. Okay. I hope that makes sense. Okay.
Yes,
Which means,
prorated impound
correct,
accounts.
correct. Which means if you keep this loan for 30 years, okay, you'd be saving roughly about 22,000. Now that's good. Money is money. But is it worth it yet for you to refinance yet? Okay. Is up to you. That's up to you whether or not you feel okay, is the market going to go down a little bit more? Now, here's where it gets a little bit tricky. Okay, let's just say you've had this loan for 1.5 years. If you did that, again, you're still saving the same amount on the monthly payment and the annual payment in the life of the loan. However, at this point, you've already paid $48,000 almost. And realistically, for the life of the loan, you're only saving $6,000. So is it worth it for you to increase your loan amount, okay, to save on the life of the loan $6,000? That's where it gets a little bit tricky. Then let's just say you've had this loan for 2 years. Okay. Keep in mind, this is also based on the value of the house. Now you're actually losing money if you're refinancing back to a 30-year and the interest rate is 6.25. This part is really important because during this time, prior to the Feds lowering the rates, many of you, especially a lot of my clients too, have gotten calls, solicitations from other lenders, and also your current servicing lender say, hey, go refinance right now. You're going to save $165. I was like, okay, yay, great. That sounds all handy and dandy. This is what I would challenge you to ask that lender. Okay, how much am I saving for the life of the loan? Okay, they should be able to do this math very quickly. And how much have I already paid since I've already had this for 2 years? That should also be very, very quick because all you have to do is add this up by 2 years. Okay, then minus the refinance cost, and what would that be? If whoever you're speaking to is not giving you this information, hang up that call and call your actual loan officer. A lot of times, the servicing lender who's calling you is not going to be the same person that you spoke with. So here's the difference between your original loan officer, who should be your advocate, and who should be your advisor to break this fully down for you. Okay, I hope that helps so that when you do get those calls, do your research, take a look at the math, and see if it does make sense for you. Now, I'm going to go ahead and share with you the difference between a 30-year, a 25-year, a 20-year, and a 15-year. So right now, the interest rate is the same. However, if you look at this, okay, even if you had this loan for 2 years, you're adding an additional $30, people. You're adding an additional $30. Yeah, it's not going to look like you're saving money, but in the long run, if you know for a fact you're going to keep this house, whether or not you're going to live in it or whether or not you're going to keep it as a rental, Okay. Technically, because you're shortening the life of the loan, you're actually saving 82,390. Huge difference if you kept it as a
Hmm.
30-year versus a 25-year. So this would actually make sense. For you adding just an additional $30, you're actually going to save over to $82,000. That I think would be much more worth it if you decide to refinance. Now, if you do it as a 20-year, the 20-year and the 15-year rate right now is actually only 5.75 on our end. Okay. Again, you're adding an additional 200. If you got a raise and you know this is very doable for you, this might be a great thing because look, you're saving over $200,000 in the life of the loan. And if you do that 15-year, you're saving over 285 versus losing almost $10,000 on this refinance. I encourage you again, ask your lender these questions. They should be able to break this down, have something very similar to this so that you know if refinancing truly makes sense for you. Okay. Don't just look at the monthly savings.
That was a lot of numbers, Lisa.
It is a
But
lot of
this
numbers.
is but then I'm glad you showed this in actual demonstration purposes for number wise,
Yeah.
right? Because it's pretty realistic, right? And a lot of people don't understand that refinancing with the lower rate may not necessarily be beneficial to a lot
Right.
of people if you're really if you've heard what Lisa said. So
Yeah.
yeah, it's not shocking for that. Just because the rates went down don't really mean much because it hasn't really gone down enough to where it's gonna save you anything on the long run. You know, in most of
Right.
these cases, you're actually losing money on the savings. So it's better to just call someone like Lisa and talk to them, because yes, it gets kind of like it's like a big tease when you receive one of those spam or solicitation mails and they want to refi and your home or run your credit to see if they can help you out, but they don't know your situation. And then for them, remember, it's like a marketing form that they're doing. They're spending thousands of dollars to send you that mail to see if somebody like you will call them so they could run the numbers. Because sometimes some people might want to do it, but for most times, if they're not giving you this rundown, then that you're not gonna really know the whole truth. And
Absolutely. And that's the
yeah,
thing. Most of the time they only will share with you what your monthly savings, your annual savings, and your possible life of loan savings. They will not share with you what you've already put into the loan and how much it would cost you in the long run. Okay. So definitely always review that, okay, before you move forward. And this is a chart that I created that so that you can see, hey, well, it doesn't make sense for me to refinance right now. However, when would it make sense for me to refinance? Okay, let's take a look at that. Let's say the interest rates goes down to 6%. Okay, so earlier you're losing $10,000. Even if the interest rate from 6.25% to 6%, okay, now it's going to save you almost over $13,000. Makes a much bigger difference. And if you waited it a little bit, waited a little bit longer, hopefully, and it goes down to 5.75, that's half a point more. Now you're saving almost $37,000, and that would be a lot more worth it for you, especially if you had this loan for 2 years. Many of you do have a 7 to 7.5% interest rate from the last year, 2, maybe even 3 years. Okay, so definitely reevaluate your situation and take a look at the pulse. A lot of times people are saying, okay, well, I'll just wait until it gets to 5.75 or 6% to refinance. The lender cannot lock in your rate until they actually have your full file, guys. So if you're ready to do that, if you know that, okay, it's starting to get there, even if you put in your submission right now, it's okay. Monitor the pulse. And as soon as the rates goes down there, boom, you can go ahead and lock it right away. Okay.
you could wait chain, or if you already have enough equity from when you bought it, then it might come off already, the
That's true.
PMI.
So here's the other thing too, okay, Chang? Because a lot of times, even let's just say, for instance, if you're waiting for to pull off your PMI completely, you may not have to do it that way because you have to understand if you're saving money already, you might want to take a look at whether or not doing right now because the PMI that you paid when you're you put in 5% is gonna be higher than what it is if it's 10% or 15% too. So let's just say, for instance, your PMI is roughly $200 right now, but if you refinance, hey, you've actually gotten at least 10% of equity. I'd really revisit that, because the PMI might actually only be $50 to $75. It'll save you on that portion. And even at 6%, if you're able to even lower that part, this is the part where I'll say bird in the hand or two in a bush, right? Everybody's going to wait for that two in a bush, but what if they fly away? Take a look at your numbers first, see if you're going to be able to capture that savings first now. And who's to say, if you get that 6.25 and it saves your money, if the event that the interest rate falls down to 5% and you're still saving more money, absolutely do it again. There's no amount of times of refinancing that you can't do. Of course, the less amount that it is, the less you'd pay for the refinance. But again, if it already saves you money and you can recoup that cost quicker, absolutely take a look at that time too.
There you go, man.
Hope that helps, Chang.
I know the other day I posted up a picture of the mortgage rates for last week, and it was right after the Feds said they just reduced the rates, right? And
I'm glad you did that. I
oh,
saw that.
yeah, and then the mortgage rates actually went up from when I showed it from the week before that. And the comment was like, this is interesting data that you're showing because the Feds just reduced the rate, but yours says it went up. That doesn't make any sense.
Right.
It makes perfect sense because if you was listening to what Lisa was just saying a minute ago, that's why you don't pay attention to the Feds cutting rate because again, they're not cutting it just for mortgage rates.
Correct. They
You know,
never
they're
say
cutting it. They
Fed's
never
cutting
say anything specific
for
to
mortgages. They
mortgage.
say Feds are lowering the interest rate.
And that's across the board, you know. And then when it comes to that, sometimes it ends up making mortgage rates go up because now all the investors out there are like, oh man, like economy is not doing so well. Okay, never mind, you know, then it changes everything. So it's always best to talk to like a loan officer like Lisa and then get the actual breakdown of what the rates look like right now, like today, versus going based off of what the feds are doing. You
Yeah,
know, so
absolutely.
that's what I would recommend. And that's why we wanted to talk about today's topic because we do get people that reach out to us a lot when the moment they see the news like that, it gets them excited because some of these clients of ours, they brought a home last year, like what Ching said, at 7%. It's just too high for them. Or even the year before that, it's still slightly high, and they're waiting for the rates to drop down to 3. I don't think 3 is ever gonna happen again.
Yeah.
um, if anything, 5. Like again, I don't know. We're already at 6, you know. And then if you keep looking at the mortgage, um, like this tab right here, eventually, sometime, like look, 15 years at 5.8 right now, you know, and FHA is at low 6, almost breaking high fives, you know. So like
Right.
we might get there. We might be prospecting high fives, you know, by the end
And
of the year. But
keep in mind, the beginning of the year was closer to the 7%. So this is a huge change already. It is doing it slowly, okay? But in the 5% after next year, it's actually, I would say it's possible, but let's see.
see, January 2025, it was at 7.6, 7.1%.
Hmm.
And then now we're at, 6.3. So, it's not really a full point, but we might be getting there, but who knows? Like what if the job market does very well? We don't know. Like everything gets changed,
Right.
From one thing I've learned so far within the past couple of years, Lisa, is it's never what you think it's gonna be. Everybody gets it wrong. Like COVID, a lot of people thought the market was really gonna crash and finally, correct itself. But that did not happen. Sales went through the roof. That's like one of my busiest years. It was crazy. Refinance was through the roof, right? Everybody. everybody was becoming a lender during that year because it was like a refi boom, right?
Yeah,
And then during that time, it created a lot of fake success
yeah,
because everybody thought, man, I could do this. But then once the market is where it's at right now, like this year is a very weird year, right, Lisa? Like
yeah,
this year showed a lot about who were really the players, who were really the one working, putting the hustle in building their business, building relationships with their people, their clients, and really not relying on something that was crazy as, Rona, So this year has been very weird. Very
yeah.
weird.
It's a very unique weird way. It's a very unique year. Absolutely, we see the transition in many of our clients, in many of our agents for sure. And really, Gia, we're not talking about just a refi boom. Usually, when there's a refi boom, it's because the interest rates are lower. The interest rates are lower, causing what? Buyers to buy, homes to increase. So it's going to go back up. So what I'm saying is don't wait for that quote unquote sky to fall. Okay. Because we keep getting caught back and forth and back and forth. It's like, oh, it's going to be a buyer's market soon because now we have 2.6 months worth of
Hmm.
inventory, which pretty much doubled within the last 5 years, right, Chia? But it's going to go back. It's going to go
Hmm.
back to that point where, okay, it's if the interest rates drop, if it drops to even 5.5%, it's going to be that frenzy again. And then, of
Yep.
course, it drops again to 5%, which everybody's hoping for. And everybody is hoping for that COVID time uh, uh, interest rates. That's just going to drive the market even more, which means
Yep.
if people are able to refinance, what happened then? There was a limited amount of inventory. There's going to continuously be a limited amount of inventory because guess what? Instead of selling, many people will refinance instead.
Not just that, but we have a lot of investors out there that's gonna utilize their equity in their home
Mhm.
and do a refinance and cash out like Chain here, right? He's
Uh-huh.
waiting to take money out. And guess what Chain's gonna do with that money? He's an investor. He's gonna go buy another property with that money because money's so much cheaper to borrow now. So there's a lot of people like that are waiting right now too, because not because they want to just refinance, it's because they want to borrow money again to go buy more flips, buy more homes, you know? Um, yeah, Chang, I'll talk about it when it's done, bro. It just closed. We haven't done any renovations on it yet. So um we're working on, man. Probably like in another month and a half, I'll give everybody an update. I promise. I'll go over all of that with you guys. I think it'll be a pretty good show to talk about, and that way it can inspire a lot of people to start thinking about doing it too. Because anybody could do it, but I think a lot of people are just kind of scared to take that first step. Um, so yeah, I'll definitely share the numbers, man. I promise. Okay. But yeah, if interest rates go down like everybody wants, I think everybody wants the rates to go down, but not everybody wants the competition that comes with it.
Yeah.
When the competition comes, the price you see today is not going to be the price you pay. It's going to be probably over 20, over $50,000 above that, you know? So like my listing just came 2 weeks ago, right? The one that I just listed, we got 5 offers and they're all over asking. So like it's because we priced it right, we marketed right, we did everything right, we staged it, took photos, took videos, did all of that, and um we were expecting to get multiple offers over asking, and everything worked out. And that's what I'm trying to say to a lot of sellers right now that are having a hard time selling their home, is probably because within the first 2 weeks you guys probably didn't really market it correctly, And sometimes, it's not just the agent, it's the sellers too, okay? Because agents could only do so much.
Yeah.
So you guys heard me say here a lot to where it's like if you're an agent, you're representing a seller that wants to list high than what you're recommending them, then you need to really let that seller know that hey, if it doesn't move within a week, you might want to consider dropping the price because first 2 weeks of it being on the market is very crucial, you know?
Yeah.
And that's so true, especially right now with days on the market being averaging 40 days. You're still paying that mortgage and you're paying for those utilities, you know? So eventually you're gonna have to lower the price down to make it market price so to get buyers' attention to want to buy it. Or you're gonna be paying it out your net because you're still paying for the mortgage every month anyways. People don't think about that. The interest in the mortgage payment that you're paying every month on your home while it's sitting on the market, it's eating at your net. Remember that. It's not just about selling your home at a certain price and giving a certain amount of dollars as for credit. It's about your mortgage and your utilities, your overall net that people don't consider. They need to start jumping on now. Right now is the best time to buy as rate are coming down and buyers still have some kind of leverage. For real, that's what I said. You know, I was like, man, you know
Mhm.
what? Should I buy this rehab? And and I'm looking at it now. I remember one thing that Warren Buffett said. He said, I don't know if it was him, but I think he said something along the lines of when everybody stops buying, that's when I buy more. When everybody starts selling, that's when you know? So I was looking at it and I was running the numbers on the flip and I was like, oh man, this is such a good deal. How come nobody's taking it? And I ran the numbers, got my contractor to go look at it, and I'm like, oh my God, it's a pretty good deal. So then, we decided to pull the trigger on it. But again, I'm not here to talk about my flip that I just got, but I will share some of the details with you guys just to inspire you guys to do it yourself as well. Because Chang, he's in Fresno, Lisa's in El Grove, I'm in Natomas, and there's plenty of deals out there. You just got to know who to talk to, where to find them, and how to really calculate like the numbers. If you don't know how to calculate the numbers, I think that's where the biggest investors fail is they don't know how to calculate the numbers and then they shoot themselves in the foot. They don't give themselves enough of a spread for error, So, um, but I don't know if I did a good job too, because then we just got it. So we don't. I'll let you guys all know next month when I go through the numbers. But for right now, I think there's still a lot of opportunity for people, that's trying to make money. And it's like what Chase said, we are going into the slow season. Winter's around the corner. We got New Year's, we got holidays. Everybody that wanted to buy, that was part of that buyer frenzy this past month or so, they're not in the market anymore. They already bought, or they're waiting till next year now because school season started already. And everybody's saving up for the holidays right now. So if you guys are into new builds, I always say November, October, November, those are always the best time to go and negotiate with those guys because they need to close their books. Um, and even with sellers, homes that's on the market right now towards the winter time, those sellers really need to sell. They might give you a good deal when it comes to incentive, credit towards closing costs, or credit towards buying down the mortgage rate. So if you don't like what you're seeing right now with the 6.3%, there's a chance you could get the sellers to pay it, buy it down, but you just need to strategize with your loan officer and get a game plan going so that way you could leverage the time we're in right now.
Yeah. So, however much you're negotiating on the seller to buy down your rate, just keep in mind, guys, depending on how much you actually put as a down payment, okay, FHA allows you to have at least a maximum of
Yes.
6%. Okay, if you're putting less than 5% down, maximum is 3% for the seller. So, if you're already asking for that much and you're asking for more, you might want to see whether or not you can put a larger down payment down, so then you can really fully take advantage of that. Okay,
Yes, not everything you get you can keep. So
correct.
sometimes you might have to leave money on the table, and it sucks because then if you could find out ahead of time that you might possibly be leaving money on the table, then ask for a price reduction for the difference, something. So that way you don't leave nothing on the table. So for example, if you could only accept a maximum of $5,000 credit from the seller, but he's gonna give you 10,000. Don't leave $5,000 on the table. Ask for a $5,000 price reduction and then still get the 5K. Or work the numbers with your lender to see how much you could get it if you reduce it a certain amount. Work every angle so that way you can fully utilize the maximum incentive being received by the seller. Because otherwise, it's on the table, it's going back to the seller. He wanted to give you 10K, but you could only take five. So, oh, he has to keep that $5,000 profit now, So that's super important. Shane says winter months is coming, so it's best time to buy real estate. People get too comfortable during that time. Take advantage. Yep,
Mhm.
exactly it. Mo, talk about how you calculate the numbers. I will definitely talk about how I calculate my numbers, Mo. I promise you. I'm just not ready to do that right now because again, I don't know if my numbers are correct. And if it is or not, I will definitely share that with you guys so you guys don't make my mistake. Uh, but for sure, I will let you guys know how I calculate the numbers because I want you guys to do it too and feel comfortable about it. Because again, calculating the numbers sometimes is not really up to you. It's about what the market is going to give you. It's about what the appraiser is going to appraise it for because they all have their own opinion, right? I might think it's worth 400K, but then the buyer is only willing to pay me 370. Then what am I going to do? Or like if I think it's worth 400K and the appraiser goes in and say, oh, it's actually worth 450. Hey, that's awesome. I was conservative and it worked out. Now I got even more equity spread. So it all depends. And hint, I actually got more than what I appraised. I comped it at. So that was really good. When they appraised for higher, I was like, woohoo, that's awesome. So, just another thing to think about. But I will definitely share that with all you guys. I promise. Thank you for the reminder, Lisa. I appreciate that info. Yeah, Lisa, thanks.
You're welcome. I mean, if you guys really want to take a look at, like, hey, if you're leaving money on the table, okay, what would it be if you say, for instance, lower the purchase price versus buying the interest rate down?
Oh yeah, we could do that too. Because
Mm-hmm.
again, people need to see the visual, right? Because in the mind, when you calculate, you think, oh, this is better. Just like with the Feds reducing rates, everybody just assume my
Uh-huh.
monthly payment is gonna go down. But when you work the numbers, it's actually not. So you gotta show the numbers, Lisa.
Absolutely. Okay, give me just a moment. I'm going to pull it up right now.
I want
Okay.
to be like you. Kane, you don't want to be like us. Maybe we want to be like you.
Exactly.
Yes, show the numbers, please.
Okay.
I do have an appointment at 1, so just FYI, if I do
Okay.
leave, Lisa could stay on. But or if we need to continue on this, maybe we could continue this later, if
Yeah.
anything. But we have a little bit of time.
Okay. So let's go ahead. I'm going to change this here. Okay. And I'm going to use these two as a comparison. Okay, guys. Let's just say, for instance, you're buying a house for
I don't see your
500,000.
numbers.
Oh, okay. Give me just a moment.
It's on the wrong screen. You probably have dual screens.
Yes, I do. Hold on.
Yeah, that's why.
Okay. Is it visible now?
Yes, there it
Okay.
is.
Awesome. So I'm going to go ahead and do a side by side. Okay, guys. Let's just say, for instance, I'm just going to put an easy number. Okay. We're going to put 20% down. Okay. Okay. And let's just say there was $5,000 on the table still. Okay. 6.25. 6.25. Let's go back here. 6.25. Okay. We'll take the mortgage insurance out. Okay. All right. Right here, I'm going to do the math. The full amount minus, if you took, okay, this down, it's a difference of $31, you guys. Okay. If you
Mm.
lowered your price, the difference is only $31. Okay. But let's just say we do this, lower the interest rate for $5,000. Let's just say, for instance, for that $5,000, you were able to get it for a 5.875 interest rate instead. Okay. Okay, not a huge difference, but you guys see, it's still much bigger by more than three
Can you
times.
zoom in a little bit?
Yeah, sure. Is it
There
better
you go.
now?
Yep.
Okay. So you guys see that? If you were to use that
Hmm.
$5,000, okay, and lower the interest rate instead, you'd be saving almost $100. So it's just here you're only saving $31. Okay. This math is different on every single purchase price. So when you reevaluate that, especially if you're putting less than 20% down and there's mortgage insurance, so on and so forth, take a really look at those numbers. Ask your lender to give you these three scenarios. Hey, if I left money on the table. It's like, okay, if your agent and your lender is telling you, say, oh, okay, well, we can only use $5,000 of this because that's the closing cost is only $5,000 because seller's already paying for a whole bunch of stuff already. So you didn't have to pay for a whole lot. Well, if that's the case, okay, you just forego to $5,000 where you could have lowered the purchase price. And if you lowered the purchase price, this is how much your monthly payment is. You'd be saving $31. But if you utilize that to buy down the interest rate, and if it is at 5.875, again, the cost of buy down, the rate may be different. Okay. So if it is this much and you're saving at, $96 plus, it's more than three times this much. So I would say this amount saved is probably going to help you much more in the long run. Okay. I hope that makes sense.
Sweet. Yes, sir. We will do that. But I think everybody knows our contact already. It's either through Facebook here or everybody has Chat GPT nowadays. But yeah, we'll share it. We'll share it just in case they want it here. But I think that's it, y'all. Like we went through this pretty fast. We wanted to bring it to you guys, answer a lot of the questions that we've been getting. The most common was that. But for sure in the future, I will definitely talk more about the numbers on my flip that I just purchased. Um, and that way, all you guys could be inspired to do it yourself, and make some money as well. There's a lot of opportunities out there for everyone. So for sure, we will do that. Was there anything else that we're leaving out, Lisa?
Nope, that's all.
All right, well, I will do this. Maybe Lisa could do it too. I'll just put my cell so everybody knows. You guys could text me if you guys have any questions or anything like that, or reach me through DM, and we'll just go from there, y'all. But thank you guys for tuning in today's show. I know it's been a minute, but we're gonna try to keep this schedule. We figured 12 o'clock on Wednesdays is midday. 12 o'clock, mid hour of the day. Everybody's having lunch. Hey, they can have lunch while they're watching us or listening to us. So we might do that too. So don't be alarmed if me and Lisa and Charles are like here eating while giving the update with you guys. Okay, um, just letting you guys know right now. But other than that, I think we are good. All right, y'all. Well, peace out.
Have a good
See
one,
you
Chi
guys
Chi
next
fam.
time. All right, Chi Chi fams.